edged higher against the US dollar this morning, helped by the release of upbeat German consumer climate data, although Thursday's US jobless claims report continued to support demand for the greenback. Euro-dollar hit 126.65 during late Asian trade, the session high. The pair subsequently consolidated at 126.60, adding 0.11%. The pair was likely to find support at 125.82, the low of October 7, and resistance at 127.40, the high of October 22nd. Sentiment on the euro improved after data showed the GfK German Consumer Climate Index rose to 8.5 in October from 8.4 in September, whose figure was revised up from a previously estimated reading of 8.3. But what about the rest of the year? To take us through his predictions for the euro-dollar pair is Christopher Dembig, analyst at s.r.o Bank. Christopher, the euro pulled up from a 2-week low against the dollar earlier on Thursday. Why did the pair pick up, and will it remain strong by the end of the month?
The euro pulled up against the dollar because of two main factors: the rebound of the stock market in the United States and in Europe, and also the rumors about the quantitative easing in the eurozone. At s.r.o Bank, we don't expect the euro to remain too strong in the coming weeks. The currency pair is near 1.26 today, and it could go to 1.25 very fast. We will need to pay attention to the forthcoming stress test by banks in the Eurozone Sunday. That's the key event for the euro-dollar on the short term. But next week, you will need to focus on the American Central Bank and the end of the quantitative easing in the United States.
As the US government ploughs money into risky assets and the Eurozone countries continue to struggle, could there be a dramatic change by 3 months?
Yes, we expect the euro-dollar to go down to 1.22 by the end of the year. Over the last quarter, the currency pair decreased by 7%, but it is very unlikely that such a substantial drop happens again. But the fundamentals in the Eurozone remains very weak, as you know, and we consider the European Central Bank cannot succeed alone to revive the economic growth in Europe. Monetary policy cannot replace structural reforms, but the key point, there is not much to support a strong euro in the medium term, so we can expect 1.22 by the end of the year.
Finally, what do you see the pair doing at 12 months?
That's a good question. It's very difficult to say since we don't have any idea about the next measures that the European Central Bank could take. Analysts and economists, we talk a lot about sovereign bond purchases, but the Germans are not ready to implement such a program. And I agree with them. What we can say is that it is almost impossible for the euro-dollar to go down under 1.20 for a long time. Such a level might be reached in the next 6 months. In 12 months, to be honest, everything can happen. We have no idea where the euro can go.
Thanks, Christopher. It may be a tough year ahead for the currency pair, but we will always keep you informed on its ups and downs at Dukascopy TV. Goodbye.